Good afternoon, and welcome to John T. Boyd Company's webinar entitled Complying with SK 1300, Maintaining Compliance in Light of New Reporting Requirements. We are pleased that so many of our friends and clients could join us today. Boyd understands the mining industry from the technical side and from the business and financial perspective. Our core business since 1943 is the technical, operational, and financial assessment of reserves, mines, and mining companies. Boyd has performed thousands of assignments in coal, proppant and frac sand, industrial minerals, as well as base and precious metals, both in the US and over 70 countries throughout the world. Over that time, Boyd has grown to not only have offices in the US, but also in Australia, China, and Colombia. Our senior professionals are recognized competent persons with decades of experience in the principal aspects of the mining and minerals industry. Be sure to check the virtual hub on our website for additional presentations and interesting analyses on a variety of subjects, and follow our social media for future announcements. This presentation contains only general information. Boyd is not, by means of this webinar, rendering professional advice or services. We appreciate all of you who have retained Boyd to prepare your SK 1300 disclosures. And for those who haven't, hopefully this presentation will raise your awareness and lead to further conversations. Now it's my pleasure to introduce today's presenters. Rob Farmer, Vice President at Boyd, is a mining engineer with extensive experience in geologic modeling, resource and reserve estimation, underground and surface mine design, production scheduling, and financial modeling. He has performed various engineering studies for coal, industrial minerals, and base and precious metal deposits throughout the world. Rob is a competent or qualified person in the preparation and reporting of resources and reserves under the JORC Code, NI 43-101, and SEC Rule SK 1300. Greg Stanish, Boyd's Director of Geological Services, concentrates on the design and management of exploration programs, interpretation of exploration data, evaluation of depositional features impacting mineability and utilization, development of computer geologic models, and preparation of resource and reserve estimates for mining companies and for private and public financing. Greg is a competent or qualified person in the preparation and reporting of resources and reserves under the JORC Code, NI 43-101, and SEC Rule SK 1300. Thank you, Rob and Greg, for developing today's presentation.
All right, thank you, John, for the introduction. The gist of our presentation today is that SK 1300 is here. If you're joining us today, it is more than likely that your company has to comply with SK 1300, and you're seeking ways to ease the burden of compliance. A brief introduction as to why we're discussing this topic is on October 31st, 2018, the SEC adopted new property disclosure rules for mining registrants. The new rules intended to simplify mining-related SEC filings and bring disclosures in the US more in line with other rules or codes recognized around the world. In an attempt to minimize burdens of associated costs and time necessary to become compliant, the final rule approval included a 2-year transition period, which becomes compulsory for the registrant's first fiscal year, beginning on or after January 1st, 2021.
Thanks, Greg, and hello, everyone. Further to Greg's introduction, I'd like to add that the new rules, that is SK 1300, require the comprehensive disclosure of technical information for the registrant's mining properties, whether these properties are owned or operated. These new disclosure requirements could have significant implications for existing and new mining registrants and will likely require substantial efforts to ensure compliance.
By way of some background, in July 2016, the SEC proposed implementing new rules designed to modernize the US mining property disclosure regime, which hadn't been substantively updated since 1982. The result of this proposal was SK 1300, which was finalized on October 31st, 2018 after a lengthy comment period and became law on February 25th, 2019. As was previously noted, in 2019, a 2-year transition period was allotted to registrants, which means we're now closing in on the start of the upcoming 2021 fiscal year timeframe.
So the main goals for the new regulations were the consolidation of the disclosure requirements under one comprehensive rule. The prior requirements were spread across portions of Regulation SK, Industry Guide 7, which I'm sure everybody on the webinar has heard of, and the SEC's interpretive guidance related to Industry Guide 7. Also included better alignment with the global industry and regulatory standards. That is a better alignment with the CRISCO-based codes, such as Australia's JORC code and Canada's NI 43101. This was done to ensure that U.S. companies are not left at a competitive disadvantage in capital markets. It was also done to provide investors with a more comprehensive understanding through the CRISCO principles of transparency, materiality, and competence of the registrant's mining properties, which should help the investor make more informed investment decisions. So you may be wondering if your company is affected by this new regulations. Well, SK 1300 generally applies to all companies listed or planning to list on US stock exchanges, whether it's their primary listing or not, who either have mining properties or operations that are collectively material to their business and financial condition, or whether they are vertically integrated manufacturers with material mining operations that are secondary to or in support of their main non-mining business, and also to companies who are royalty companies or other non-operating companies holding economic interests in mining properties and operations. There may be other instances where SK 1300 disclosure requirements may apply to non-traded companies. A couple examples I can think of, there may be a joint venture or other partners that require SEC compliant disclosures. It may be useful for marketing a company or a mining property or a royalty on a mining property. It also may be relevant if a company is considering unregistered offerings of securities, that is like private offerings such as Regulation A, A+, or Regulation D offerings. And another instance that I think it may come up is if your private lenders require SEC compliant technical reports in considering your credit applications. Before we move to the next slide though, I think it's important to note that SK 1300 will likely become the de facto standard for disclosure for US mining companies, whether they are publicly traded or not, sooner rather than later.
All right. You'll find the term material being mentioned quite a bit throughout SK 1300 and this presentation today. As a definition, SK 1300 refers to Securities Act Rule 405 and Exchange Act Rules 12B-2. And paraphrasing, these documents state that a company's mining operations are considered material to business or financial condition if there's a substantial likelihood that a reasonable investor would attach importance to the information when deciding whether to buy, hold, or sell a company's securities.
Further to this, under SK 1300, there's no definitive threshold like the old 10% rule for materiality. Instead, the company's management must evaluate the significance of the potential disclosure of the resources and reserves in the context of the company's overall business and financial circumstances and exercise their judgment in determining whether the disclosure is required. And when doing this, they should really consider the consequences of consciously deciding not to make the disclosures. Under SK 1300, materiality is assessed at both the corporate level, the business level, i.e. is mining material to your business, or at the property or operation level, that is the mine material to our business. Well, it's certainly not professional advice. We would assume that if a company has historically reported reserve estimates in its annual reports, then it's very likely that mining is material to that business. Likewise, if the company has disclosed reserve estimates for individual mines in the same annual filings, then it's likely that those are individually material to their business. On the other hand, if you're a paving company with a small sand and gravel quarry located near a job site, it's probably safe to say that mining is not material to your business.
So what are some of the key differences between the previous Industry Guide 7 requirements and the new rules under SK 1300? To start, Industry Guide 7, or IG7, is simply a 2-page document with a very short list of required disclosures and an even shorter list of definitions. Contrary to its name, it's rather vague and doesn't provide all that much guidance for reporting companies to follow. In comparison, SK 1300 is quite voluminous, expansive, and prescriptive regarding required information and supporting documentation. A few of the key differences include the things such as the definition of what a mineral may be considered. Under IG7, this is not defined. Under SK 1300, it states that a mineral may include things such as dumps and tailings, geothermal fields, mineral brines, or any other resource extracted on or within the Earth's crust. Some specific exclusions are made for oil and gas resources, other types of gases, and water. Regarding exploration results, disclosure of exploration results under IG-7 was prohibited previously. Now under SK 1300, disclosure of exploration results is required as long as the property is considered material to the registrants. Mineral resources were only permitted to be disclosed under IG-7 when required by foreign law, for example, filing under an NI 43-101. However, many companies have circumvented this and reported resource material actually as non-reserve materials. Under SK 1300, disclosure of resources is required again and must also be supported by an independent assessment. Mineral reserves under IG-7 were required to be disclosed and had to be supported by a final bankable feasibility study. And disclosure under SK 1300 also requires reserves to be reported. However, they must now be supported by either a pre-feasibility or feasibility level study. Commodity pricing under IG-7 was based on a trailing 3-year average, and the updated rules now require that commodity pricing must be reasonable, but it also must be supported by a detailed market study. Qualified persons, under IG-7, there was no specific requirement. However, in principle, professional judgment was to be applied, and consent of the professional was required for disclosure in annual reporting. Under SK 1300, it states that the independent or internal QPs must be involved in the preparation of the required technical studies and the disclosures. Required disclosures under IG-7 required a summary description of certain items for each mine, plant, or other significant property in annual reporting. SK 1300 requires disclosure for registrants with multiple mining properties, as well as disclosure of internal controls. Additional disclosures are also required for any properties considered material by the registrants. Under SK 1300, all disclosures of exploration results, resources, and reserves must be based on work performed by qualified persons. In other words, the QP's work underlies all of the disclosures, and the QP prepares and signs these disclosures as well. SK 1300 defines a qualified person as a mining industry professional with at least 5 years of relevant experience. So for example, a geologist that has only worked in coal-related exploration can't really sign off on a porphyry copper deposit disclosure. And the QP must also be a member or licensee of a recognized professional organization.
Qualified persons under SK 1300 may be internal to the company or external, that is independent to the registrant. However, they must not be a proponent of the property. Under SK 1300, any qualified person named in a registration statement or annual filing is considered an expert and may be liable for misleading disclosures. Class actions regarding misleading registration statements are not uncommon in the US. As such, qualified persons may be subject to catastrophic personal liability. If the QP is an employee of the registrant, they must be named in the registration statement or annual filing and provide written consent on an individual basis, thereby exposing them to personal liability. To mitigate liability for individual QPs, SK 1300 allows a third-party firm comprising QPs to sign and provide the written consent necessary for disclosures as experts under the Securities Act without naming the individual QPs. In this case, the firm would bear the potential liability for which it likely has protections in place. The QP is also permitted to disclaim responsibility for and liability for misstatements or omissions in any information outside of their knowledge of expertise that has been provided by the company or the registrant. However, this is limited to the following topics: macroeconomic trends and interest rates, marketing information and plans that are within the control of the company, legal matters outside of the expertise of the qualified person, environmental matters that are outside their area of expertise, any accommodations or plans that the company intends to make to local individuals or groups, and governmental factors that again are outside the area of the qualified person. At the risk of self-promotion, We believe that disclosures prepared by independent professional firms such as Boyd will enhance investor confidence by improving the quality, significance, and reliability of the prepared estimates. Just to reiterate there, so if the QP is an employee of the registrant, they have to provide their own written consent and assume individual liability.
All right. SK 1300 regulates the disclosure of exploration results, mineral resources, and mineral reserves. As was previously noted, mineral exploration results must now be reported, and exploration results are defined as any data or information generated from geologic exploration programs such as drilling, trenching, sampling, analytical testing or assaying, any of these things that are used to locate, investigate, define, or delineate a mineral prospect or deposit. It's important to note that exploration results are not included as part of the disclosure for mineral resources or reserves. And with that noted, we'll move on to mineral resource and reserve disclosures. SK 1300 requires the disclosure of mineral resources on any of the registrant's material properties. Mineral resources, by definition, are concentrations or occurrences of a material of economic interest in or on the Earth's crust in such form, grade, or quality or quantity that are reasonable prospects for economic extraction. Determination of mineral resources must be supported by initial assessment, and this has to be prepared by qualified persons. The initial assessment must subdivide mineral resources in order of increasing geologic confidence. So you break the resources into inferred, indicated, and measured classifications, and this is all based on the QP's judgment. The IA must include qualitative evaluations of relevant technical and economic factors that affect the prospect of economic extraction, and must utilize estimates of commodity pricing that provide a reasonable basis for establishing the prospects of economic extraction of any mineral that's being considered.
Finally, the disclosure of mineral reserves, which is the third and final piece of information that can be disclosed. SK 1300 defines a mineral reserve as the economically mineable part of a measured indicated mineral resource, which includes diluting materials and allowances for losses that may occur when the mineral is mined. Mineral reserve estimates must be underpinned by a pre-feasibility, feasibility study, or the equivalent, which demonstrates the technical, economic, and legal viability of the disclosed reserves. So what do we mean by equivalent study? Well, traditionally, the SEC is accepted for operating properties, appropriately detailed life of mine plans, complete with economic forecasts, that is budgets, and supporting information as being equivalent to a feasibility study. We expect this will remain unchanged with SK 1300. That said, there are no exceptions to the requirements for this type of study or level of study to be conducted to disclose reserves. Detailed technical studies, whether it's a pre-feasibility, feasibility study, or the equivalent, are required for the declaration of mineral reserves. There is no lower threshold of information required for well-established mining operations. Despite having lengthy operating histories, estimates of reserves must be supported by the requisite level of technical study.
Now, there are differing levels of disclosures required under SK 1300, and these depend on the materiality of the subject mining properties. If the registrant has more than one mining property, it must provide a summary disclosure in its SEC annual report and applicable information statements. This will provide the following information regarding all such properties, including both material and non-material mining properties, a map or maps showing locations of all properties and operations, an overview that includes the amount and type of disclosure that would relate to an investor's understanding of the mining properties and operations, and also a summary of resources and reserves as determined by the qualified person at the end of the most recently completed fiscal year. This would also be done by commodity and geographic area, as well as for each mining property that contains either 10% or more of the registrant's combined measured and indicated resources, or 10% or more of the registrant's reserves. On to individual property disclosures. In the SEC annual report and applicable registration statements, a registrant is required to include individual property disclosures, which may provide certain property-specific information for each material mining property. In addition to information similar to the current IG7 requirements, SK 1300 requires for each material property a tabular disclosure of resources and reserves, an additional narrative of the disclosures, and filing as an exhibit to the technical report summary, which will be prepared by one or more qualified persons in support of the reported resources and reserves. The technical report summary will summarize information reviewed and explain conclusions reached in the initial assessment, pre-feasibility or feasibility studies, which would also be used to support disclosure of mineral resources or reserves for material properties. A technical report summary for each material mining property will be attached as an exhibit to the registrant's SEC annual report, as well as in applicable registration statements. SK 1300 does specify 25 topics that must be discussed within the technical report summary. Some of these topics include items such as property description and history, details on infrastructure, site-specific geology, exploration and assay work, data verification, resources and reserves estimation and categorization techniques, mining methods, processing and recovery methods, market studies used to support economics and economic analysis, et cetera, et cetera. In this regard, the contents of the technical report summary are very similar to Canada's National Instrument 43101. The registrant is only required to file either during the first disclosure of resources and reserves for material property, or when there are material changes to resources and reserves of a material property since the last filed summary. Lastly, we have disclosure of internal controls, and this would cover information pertaining to QA and QC, analytical procedures, comprehensive risk assessment aspects that may relate to the disclosed resources and reserves as well.
So what are the key takeaways at this point in the presentation? Well, I think firstly, SK 1300's rigorous requirements will likely require a significant amount of deliberation and effort on the part of the company and its chosen qualified persons. There is in all likelihood an extensive amount of information that needs to be reviewed and numerous disclosures that need to be prepared. And these need to be done before the financial year 2021 annual report filing. Secondly, the registrants excuse me, should have a plan of action in place by now or as soon as possible, which includes reviewing their current reporting procedures, updating standard operating procedures and sign-off requirements, compiling available technical information for each mining property, conducting materiality assessments for each of their mining properties, selecting the appropriate qualified persons, engaging with their external financial statement auditors, because they too will be relying on the work of the QPs and that information disclosed in provided in the disclosures. And finally, they need to get around to getting their required disclosures prepared in order to include them in their fiscal year 2021 annual reports. So now that you've determined that you have one or more material mining operations and that very prudently you require the services of an external QP firm to help you prepare your SK 1300 disclosures, what is the successful approach? And you're likely very concerned about costs and timing. Obviously, there is no one-size-fits-all approach to these assignments. Every mining property is unique, as are their owners. A critical consideration in preparing the required disclosures is firstly, the availability and adequacy of the supporting information, that is the technical studies that underlie the estimates. And secondly, the level of independent technical work required on the part of the QPs. In other words, it's generally less expensive and time consuming if the QPs do not have to reinvent the wheel. The level of effort and therefore the cost will likely depend on many factors. For example, firstly, how much independent technical work is required. An audit review, which I will discuss shortly, will likely require less effort than an independently prepared pre-feasibility study. Secondly, what level of study is required for the disclosure? Resources, which only require an independent assessment, will likely require less effort than reserves. There may be instances where material deficiencies preclude reporting reserves and the decision is made to report resources only. Historically, there are tremendous quantities of unassigned reserves reported in annual reports, for which appropriate technical studies, including mine plans and budgets, do not exist. It may be more prudent to report these as resources. And it's likely that the market, which is well aware of the upcoming SK 1300 deadlines, may be expecting this correction to see reserves move into the resource category. And finally, the technical report summary, which must be included for individually material properties, will obviously require additional effort than the other disclosures. Boyd's preferred approach for those with current reserve estimates is to perform an audit review of existing technical studies or their equivalent, and to prepare the required disclosures from the results of our review. Traditionally, these audit reviews have consisted of scrutinizing existing geological models, mine plans, cash flow forecasts, marketing studies, and other related information such as environmental impact statements. These items were generally developed by the company or its consultants, sometimes Boyd. And it should be noted that these were officially required for disclosure of reserves under Industry Guide 7. So they should exist, hopefully. In conducting these assignments, we recommend a phased approach to help minimize costs and maximize the use of time. Typically, this approach consists of the following tasks. First would be compiling and reviewing the available source data for each property, an assessment of the current level of study that exists for each property, and then identification and remediation of any deficiencies commensurate with the level of reporting that needs to be done and the category that's been assigned to the property, that is resources or reserves. And then finally, the preparation of the requisite disclosure documents. In summary, if the required technical information exists, that is, do we have mine plans and cash flow models? And we believe the best approach is to audit it, and barring any material errors or omissions, to sign off on it as QPs and then prepare the relevant disclosures. Alternatively, if the required technical information is absent or deficient in whole or in part, Boyd can work independently or collaboratively with the company to fill those gaps and then proceed to prepare all of the required disclosures.
All right, John Boyd, Rob, and myself would like to thank everybody for joining us today. SK 1300 compliance sounds like an insurmountable burden, but we believe that Boyd has the capabilities and know-how to assist your company with its disclosures. Some of you had asked questions on the webinar registration form when signing up, and we'll be responding to these directly with our answers. And if you have any other questions about this presentation, SK 1300, or any other mining related topics, please feel free to reach out to Rob or myself. Our contact information is shown here on the last slide. And we hopefully look forward to discussing anything that may help ease this transition to the new reporting rules. Thank you.
Thank you.